Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. Before we get started, today's video is going to be a shortened, condensed version of what we usually do in our SPX videos. So in this particular video, we're not going to go over all the different aspects of the indicator. We're mainly just going to go over today's trades for this particular session. If you are not familiar with the SPX Daily Key Levels indicator, then look in the description of the video underneath the video on YouTube, and you will see in the description these particular links that go into more details about how the indicator works and the trading strategy. So there's a video overview as well as additional resources with a Google Drive link for descriptions, links to other videos on different topics about the SPX indicator, and then there's also links to longer that are hour to an hour and a half long SPX trading videos that will go into a lot more detail about the indicator and the daily key levels strategy. If you click on this Google Drive link, we'll show you what screen that takes you to. That'll take you to this particular document, which will have links to other specific topics that are covered about certain aspects of utilizing the indicator. Thank you. Hello, in today's video we're going to be taking a look at the Friday, December 12th, 2025 trading session for the CBOE SPX index. We'll be utilizing the day trading GPS SPX Daily Key Levels indicator, specifically the V2.0 version of the indicator, which was just released about a month ago. Okay, so today's video is going to be a shortened, condensed video that's going to be a lot shorter than our typical session videos. We're not going to go into every aspect of how this indicator works and what all the different levels mean. We did show in a preview to this video a link that you can go to in the description of this video, which will have a link to an extended video overview of the SPX Daily Key Levels V2.0 indicator, and also there is a Google Drive link that has links to various videos on specific topics about the indicator, which we may be referencing throughout this video. So I would invite you, if you'd like to know more about how this indicator works, to click on those links in the YouTube description of this video. Also in the description of the video, there's going to be links to other full session videos that are typically going to be about an hour long to an hour and a half long, which go into a lot more detail about how the indicator works and more details about the SPX Daily Key Levels 0DTE option day trading strategy and some other aspects about the indicator. Okay, so in today's session we have the 9:30 a.m. Candle marked off here. We have our bull bear key price level for the session, which the indicator gives as 68.9798. We also have our pre-market high from the indicator, 69.0490. The YDH level, 69.0346. YDH is the yesterday's daily high, specifically the previous day's RTH session high. YDC, yesterday's daily close, specifically the previous day's RTH session close. The PML level, which is the pre-market low. The YDL level, which is yesterday's daily low, specifically the previous RTH session low. Okay, so with this indicator you can take bullish or bearish trades off of any of the main key levels. The main key levels with this indicator are, with the V2.0 indicator, are the SPX bull bear key price level. That is the most important of the main key levels, and that is the important bull-bear pivot level for this particular session. So bearish below and bullish above. The other main key levels that you can take bullish or bearish trades off of with this indicator are going to be the R1 through R6 levels and S1 through S6 levels. The S1 through S6 are below the bull bear KPL, and the R1 through R6 are above the bull bear KPL. Now in this particular session for this video, as you can see, we've drilled down to the R1 down to the S4 because of the way price action was dictating for the session here. Normally when you have your indicator first opened, it will show all 6 levels above and all 6 levels below. However, that is too compressed of a display for the beginning of the session. So what you do is you simply take your mouse and drag over to the right side price axis, and you simply expand the chart to where you can see these levels more clearly, including the midpoint levels and these QL levels, which are very important as well. The midpoint levels and the QL levels are not levels that you take trades off of. They serve other purposes. With this indicator, the QL levels are for tight stop losses if you prefer to use tight stop losses on your trades. As you can see here, we just have the QL above the BBKPL level and the QL below the BBKPL level turned on. That is the default native display on startup. You can turn on the QL levels above and below any of the main levels through the user control panel. But on the beginning of a session, you typically just want to have the QL above and QL below the BBKPL, because in 90 to 95% or more of the sessions of the 250 to 255 or so sessions of the SPX that you have in an average year, 90 to 95% of those sessions at the beginning, your trades are going to be focused in the beginning of the session on the bull bear KPL. Later on in the session, depending on price action, you may have other bullish or bearish trade entry opportunities off of the other main R or S levels. And if you prefer to use a tight stop loss, then you can simply turn on the QL above or QL below, depending on whether you're taking a bullish or bearish trade off of those levels in the user control panel. The midpoint levels are for standard stop loss levels, depending on whether it's a bullish or bearish trade and depending on what level you're taking the trade from. So in this case, default native startup display, we have only the midpoint level above and midpoint level below the bull bear KPL turned on. As price dictated here, this bearish action, we turned on the other midpoint levels in the user control panel to manage our trade, our bearish trade in this particular session. The midpoint levels, in addition to being the standard stop loss levels for bullish or bearish trades off of any of the main bull bear key price level or main RS levels, also serve additional purposes for gauging continuing momentum in a trade that is going in your favor, and they also serve a additional purpose of waypoints for decision making on what we call a regular trade. There are two types of trades you can take with this indicator. One is a scalp only trade and the other is a regular trade. As I mentioned, our other videos go into more aspects of those two different trades. We're not going to go into all the aspects of those different types of trades today, so I would encourage you to look at the other longer SPX session videos where we go into more detail about that, or some of the other videos in that Google Drive link. Okay, so we have the 9:30 a.m. opening candle here, as you can see in our node over here. this 9:30 a.m. opening candle, and by the way, we're on a 2-minute chart. And with this indicator, the chart time frames you can use for this indicator for the SPX Daily Key Levels 0DTE option strategy are going to be the 1-minute time frame up to the 5-minute time frame for that particular strategy. There are other people that use this indicator for different strategies other than the core SPX Daily Key Levels 0DTE option trading strategy, such as iron condors or butterflies or other types of combination strategies that involve typically some type of spread or some type of combination of selling and buying options at different strikes. For those purposes, if you're trying a different strategy with this indicator such as that, then you may find the 10-minute and up time frames to be more suitable for those particular strategies. However, the strategy that we show in all of our SPX videos is the core SPX Daily Key Levels 0DTE option trading strategy, which involves buying calls on bullish entries and simply buying puts on bearish entries. So we're not doing combination or spread trades with the core SPX Daily Key Levels trading strategy, as you'll see in all of our SPX videos, including this one. Now, this indicator does work on chart time frames from 1 minute up to 30 minutes. So 30 minutes is going to be the maximum time frame that this indicator works on. This indicator is for day trading only. It is not for swing trading. So by day trading, we mean that you'll be opening and closing all of your positions all in the same session. Okay, so as I mentioned here, the 9:30 a.m. opening candle. As you can see, we have the bull bear key price level here. This we're on a 2-minute chart. I did mention that the chart time frames to use for this particular strategy are from 1 minute up to 5 minutes. However, we have found to be the 2-minute chart time frame to be the most consistent performer utilizing this strategy with this indicator. So within the 1 minute to 5 minute chart time frame, that is the one that we recommend. However, if you have a different preference to use either a 1 minute or a 3 minute or 5 minute, that's fine. You may be using other indicators that you would like to use with this particular indicator as well for additional confirmation. So if you prefer a different time frame between 1 minute and 5 minute rather than a 2 minute, that is up to you. However, we have found the 2 minute to be the most consistent performer, and that is the one that we use in all of our SPX trading session videos on our YouTube channel. Okay, so the 2-minute candle, as you can see here, opened quite below, however rapidly traveled up and closed. It's a fairly large candle here. It's basically about 10 points in this candle here. However, it did still close below the bull bear key price level, so that is still a bearish entry, even though it is a large green candle, because mainly it is closing below the bull bear key price level, as you can see here. So that's the most important aspect of the 9:30 a.m. opening candle, and it also is closing within the acceptable range for a BBKPL level bearish trade. Now, going back to this link so you can understand what the acceptable range means, I'll show you that real quick. Okay, so this was in the preview to the videos. You can see these are the links here. This part here is in the YouTube description of this video, and this particular link here in additional resources is a link to a Google Drive, which will take you to this document here, which has all these different topics on this particular indicator. Some of these we'll be referencing in this video, but this particular one here is the one about 9:30 a.m. opening candle trades to avoid and how to recognize those on the 9:30 a.m. opening candle, and it also discusses the acceptable range and what is outside the acceptable range. Also, there is a Google Drive PDF document here that also goes into more details that accompanies this video, and it discusses more about what is the line in the sand for the acceptable range, and that acceptable range also applies to taking trades off of any of the main key levels, not just the BBKPL level. Even though this video is focused primarily on the 9:30 a.m. opening candle, that the same process applies as far as acceptable range to other entries, whether bullish or bearish, that you may want to consider on candle closes above or below any of the main key levels with this indicator. Okay, so this is within the acceptable range. Closing below bearish entry. So that bearish entry is going to be buying puts. Now, how do we determine the option strikes to use? There are 3 different option strikes that you can use on any bullish or bearish trade off of any main key level with this indicator. One is a standard play, and the other 2 are out of the money plays. So the standard play, or the core play with this particular strategy, is the at the money option closest to the level that you're taking the trade from. In this case, we're taking the trade from the bull bear KPL 68.97.98. The closest SPX strike, since SPX is in 5-point strike increments, is going to be the 6900 strike, and since this is a bearish trade, we'll be looking at the 6900 put. So the 6900 put, we're buying it on the candle close. So you want to make sure that the candle closes, because if this candle had indeed continued traveling up intra-candle and then actually closed above the bull bear key price level, then we would be looking instead at a bullish trade on the opening candle, as opposed to the what did happen closing below, and now we have a bearish trade. As you can see here, we have the data boxes from Thinkorswim. By the way, this indicator only works on the TradingView platform. You can place your trades to Thinkorswim, Webull, Robinhood, TradeStation, E-Trade, or any broker that offers SPX index options. However, the indicator is made only for the TradingView platform. Okay, so the 9:30 a.m., these are the 2-minute data boxes, and these are the ask prices. Now, I had mentioned there are 3 different strikes that you can consider on any bullish or bearish trade from the level you're taking the trade from. So how you determine it is pretty simple. Also, there is another video on that. So I'm not going to keep referencing this document again, but just here. The video overview, default look on startup, discusses all the indicator features and inputs in the user control panel, how to set up and use the historical BBKPL level feature and historical main and R and S levels feature, discusses entering bullish and bearish trades off of any of the main R or S levels, and also the 2 different types of entries, standard entry versus conservative entry. And this was the one about the acceptable range that we showed earlier. This also discusses the process of how to determine the 2 out of the money strikes you can also consider using versus the standard play at the money strike. Video on how to place stop losses on options on the Thinkorswim platform based on the underlying price, and also an additional video on that topic. This is also a video regarding the out of the money and at the money strikes, and then here's also some other videos here where we go into more detail that are session videos. And then finally, this one here, the video discussing the pros and cons of using 0 DTE versus 1 DTE options when day trading SPX options using this indicator. So you can use 0DTE versus 1DTE. Keep in mind that in either case you are opening and closing all the positions all in the same session. That's why you would not want to use anything more than 1DTE, because then you're paying more for time value, which is unnecessary since you are opening and closing any position in the same session. You're not holding them over session to session. You're not swing trading with them. So there are some pros and cons, and in this particular video we go over the pros and cons, so that's up for you to decide if you're using this indicator, whether you prefer to use the 1DTE or 0DTE. Okay, so here we're using 0DTE options. How you figure out what are the other two option strikes you can use. So we have the one standard play at the money closest to the level we're taking the trade from. That's the 6,900 strike because we're taking the trade off at this level. It's a bearish trade, so we simply look below, and you have the first midpoint here, 68.90. That is your first out of the money alternative option that you can consider. The closest strike to this S1 level, mid BBKPL S1, specifically the first midpoint below the level you're taking the bearish trade from. So that would be the 68.90 strike. The furthest out of the money you can consider on this trade is going to be the closest strike to the level that's one level away in the direction you're trading from the level you're trading from. So that would be the S1 level, 68.8236, so that is the 68.80 put. The 6,900 put on the candle close on the ask on the candle close is 15.50. The ask price on the close of the 9:30 a.m. candle, which would be closing at 9:32 since it's a 2-minute chart, $11.10. The closest strike to the furthest out of the money, or the third option, would be the 68.80, which that was $7.90. Now what about stop losses? So with this indicator, your initial entry stop loss is going to be level based. However, when you do any stop loss adjustments later on, if you're doing a regular trade and not a scalp, which again, I'll reference the videos again. If you go to the other links in the YouTube description, here are longer videos where we go into more details about regular trade versus scalp trade, and also the different adjustments that you can do on a regular trade once it's reached the minimum profit threshold. So I would encourage you to look at these videos here, and that will go into more detail regarding that aspect. Okay, so when you have a trade entry, your stop losses are going to be based on levels. The trade here is the SPX Bull Bear KPL. It is a bearish trade, so we look above for our stop losses. The tight stop loss is going to be the QL above the level you're taking the trade, the bearish trade from. So that would be the QL above this level here. The standard stop loss is going to be the first on a bearish trade, is going to be the first midpoint above the level you're taking the trade from, the bearish trade from. In this case, first midpoint above is this level here. If this was a bullish trade instead, and we were taking a bullish trade off of this level, then we would use the QL below for our tight stop loss in a bullish trade, or we would use the standard stop loss would be this midpoint, first midpoint below on a bullish trade from this level. And it works the same off the other levels as well. If you had the QLs turned on, if you want to use tight stop losses, if you just want to use standard stop losses, then you can just leave it with the midpoints being turned on. It is recommended with this strategy, as you'll see in our other trading session videos, that you use the standard stop loss. That is the best performer. The tight stop loss will have less at risk since it's the tighter stop loss. There's less at risk. However, it is more prone to getting stopped out, which means that we will have to be re-entering trades more often when using a QL above due to being stopped out. In this particular session, neither one was breached, so in this particular session, neither the tight stop loss nor the standard stop loss was breached. Okay, so as you can see here, we had a little bit of a move up. We tried to get over the bull bear key price level. However, we had our opening indicator signal here for a bearish trade, and we had the close below on the 9:30 a.m. opening candle. And as you can see here, the bottom fell out again in this candle here, and then we started our rapid descent down from there. Here on the 9:50 a.m. candle, it hits the S1 level. That is a one level minimum required move for a scalp only trade. Scalp only trades are 100% closeouts. There's no stop loss adjustments on scalp only trades with this indicator. They're simply looking for the quick in and out. So you're out on a one level move in your favor, regardless of whether you're trading one contract, two contracts, three contracts, 5, 10, or 20 or more. If you're only looking to do a scalp, you get out when it hits the one level move in your favor. How you figure the one level move in your favor is the level you're taking the trade from, in this case the bull bear KPL level. What is the direction of the trade? It's a bearish trade, so we're looking down, one level down, one key level down is the S1 level. So it hits the S1 level here. As you can see, it's slightly backed off of it on the close. Now we'll be looking at the, for each of these different options, we'll be looking at the thinkorswim data boxes on the thinkorswim chart. For these, there simply was not enough room to put all of the data boxes for all of these hits for all of these different strike prices on this particular screen. So we'll be looking at those separately. However, we do have at least the entry prices here. Okay, so when it hits here, these prices are based on the candle close. 6,900 put, 1990 profit, 440 per option. Now, if you got out on the touch rather than the candle close, you would have gotten out a little bit better price. But we're going here with just strict candle closes on all of the exits. The 68.90 put 1440, that's profit of 330 per option. The 68.80 1020, profit of 230 per option. Now here on the 10:06 a.m. candle, as you can see here, it hits mid S1 S2. That is a 1.50 level minimum required move for a regular trade. 1.50 level move. Here's the level we're taking the trade from. It's a bearish trade. One level down is S1. 1.5 level is the midpoint below S1 on this trade. Here we have the hit of the mid S1 S2. Bid prices on the candle close, as we'll see here in a few minutes on the thinkorswim charts. 6,900 put, $30.40, profit 1,490 per option. 68.90 put, 23.10, profit $1,200 per option. 68.80 put, $16.90, profit $900 per option. Here on the 10:08 candle, just one candle after this, it hits the S2 level. This is now a two-level, what's called the minimum ideal move for a regular trade. It's called the minimum ideal move because on low to moderate or medium volatility, a two-level trade in your favor is typically going to be the extent. The 1.5 level minimum threshold is going to be your minimum threshold for either exiting the trade on a regular trade or doing stop loss adjustments or start to scale out. And you'll see more details about that in the other videos that I mentioned earlier on the page with the YouTube description with those links of the videos that go into more detail. So we're not going to go into that today. You can watch the other videos if you would like to see more information on that. Okay, so here on this, it hits the S2 level. As you can see, it also backs off. So these bid prices are based on the candle close after the back off. If you exited on the touch of the level, then you would have gotten better prices than these. The 6900 is $33, profit $17.50 per 1,750 per option. 68.90, 25.40, profit 1,430 per option. 68.80, $19, profit $1,110 per option. Now here at 10:28, 20 minutes later, we have the hit of the mid S2, S3. That is a 2.5 level move for a regular trade. I did mention the minimum ideal move that's based on low to moderate or medium volatility, and also the 1.5 level move is also based on that as far as being the absolute minimum required threshold for a regular trade and how it is distinguished from a scalp only trade. Those are based on low to normal or low to medium, however you want to look at it, moderate volatility. Lately, we've been in a higher volatility scenario, so we're seeing moves that will be expanded, and today is no different. So we're having moves after the FOMC meeting this week, so the market is trying to find a new balance in the market. So a lot of times after the FOMC, also in the FOMC days, you get increased volatility. And then typically on the days after the FOMC, you'll also see increased volatility as well. Okay, so this 1028 candle, as you can see, this candle actually closes through after touching. So this is one aspect too, that you either get out on candle touches or get out on candle closes. We found that it's best to get out on candle closes in most cases. And stick with that more consistently. However, that's up to the individual trader to decide for themselves. 2.5 level move. Now 2.5 level move. Again, this was a 2 level move. Going back to this level we're taking the trade from. 1 level move, 1.5 level move, 2 level move, now 2.5 level move. The 6900 put is now 52.80 on this candle close on the bid price. Profit $3,730 per option. The 68.90 is 44.10. Profit $3,300 per option. The 68.80 is $36. Profit $2,810 per option. Remember, the 68.80 we started out with a price of only $7.90. Okay, so here we have an interesting candle. This is a very big candle here. 10:58 a.m. candle. Very big candle. Slices right through S3. Also slices through yesterday's daily RTH session low. As you can see here, it tried to retrace and go up through yesterday's low, trying to recapture yesterday's low, but did not. Then I had another red candle after that. Eventually it did find its way back to the YDL level and did pop up above it, but was not able to hold on. And we, of course, as you can see here, closed the session below the YDL level. All right, so on this 10:58 a.m., it hits both the S3 level and the YDL level. That's a 3-level move on a regular trade. Now we have bull bear key price level. S1 is 1 level, 1.5, 2, 2.5, 3. 6900 put, 72.40 now on the bid on the candle close. Profit, it's 72.40, so the profit on this at the money standard play $5,690 per option. 68.90 puts, now 63.10 on the bid. $5,200 profit per option. 68.80, 54.60 on the bid. Profit $4,670. Now here on this 11:04 a.m. candle, this 6 minutes, a couple candles later, as you can see, it slices through mid S3, S4, and then closes basically about right on it. And that's now a 3.5 level move in our favor on a regular trade. Bid prices on candle close 6,900, put 79.10, profit $6,360 per option, 68.90. Bid on the candle close 69.70, profit 5,860, 68.80, furthest out of the money 61.60, profit 5,310. Remember that this option started out at 790. The 11:38 a.m. candle hits S4, and coincidentally the S4 level is where things turned around temporarily and the selling stopped. As you can see, it hit that level, wicked through it, closed back above it, and then every candle after that closed back above it. Now, if you were looking for a bullish trade in all of this downdraft, this area here, after what appears to be things stabilizing, would be if you wanted to take a bullish trade here, then you could try a bullish trade off of S4, and then either your standard stop loss would be the first midpoint below, or you would turn on the QL level, QL below S4, and that would be your tight stop loss, and that level would be approximately in here. So as you can see in that particular instance, neither one of those was breached, and it did actually go back up one full level for a scalp to the S3, and then the minimum 1.5 level move from S4 up to mid S2, S3 for a regular trade. On this 11:38 continuing candle here on the downdraft, it hits the S4. That's now a 4 level move in our favor. Bid prices on the candle close to 6,900, put now 92.60. Profit 7,710 per option, 68.90, put 82.80, profit 7,170 per option, and the 68.80, 73.30, profit 6,540. So remember, the prices paid were 15.50, now to 7,000. So that'd be 1,550 per option here as far as the buy price. Now we're up to 92.90. Here we hit 11.10, so that's $1,110 buy price per option. Now we're up to 82.80. And then finally this one here, $790 per option. Now we're up to 73.30 with a profit of 65.40. Okay, so now we're going to take a look at the Thinkorswim charts real quick for each of these options. First, we'll look at the 6,900 put. Here is the 9:30 a.m. entry candle, 15.50 on the ask. Here's the 9:50 where it hits the S1, scalp only. Bid prices on the close. Here's the S1, S2 hit. This is the minimum 1.5 level threshold for the regular trade. Bid price on the close, 30.40. 10.08 hits S2, 2 level move in our favor, close on the bid, 33. 10.28 hits mid S2, S3, now a 2.5 level move in our favor, 52.80 on the bid. Here's where it hits S3 and YDL. 10:58 a.m. close on the bid, 72.40 on the candle close. As you can see, it did wick higher. So depending on how you like to do your exits, you did have the opportunity to get out higher in a lot of these cases. Here at 11:04, mid S3, S4 is 3.5 level move in our favor, 79.10. Finally, 11:38 a.m. candle hits S4, 92.60. So basically, we've gone from 9:30 to 11:38 a.m. So it's basically a little bit over 2.5 hours. Next, we'll look at the 68.90. All right, so here's the 68.90 ask price on the close of 9:30 a.m. 2-minute candle. $11.10. Bid prices on the different levels: 9:50 a.m. 1440, 10:06 a.m. 2310, 10:08 a.m. 2540, 10:28 4410, 10:58 6310, 11:04 6970, and finally 11:38 on the 4-level move 8280. Next, we'll look at the 6880, which is the furthest out of the money. Alright, so here's the 9:30 a.m. candle closing at 9:32, and the close below the bull bear key price level. The closing ask price $7.90. Scalp only, 1 level move in our favor, now $10.20. 1.5 level move in our favor on this S1 S2 hit, now 16.9 on the bid. 2 level move in our favor, 10.08, 19 on the bid. 2.5 level move in our favor, 10:28 a.m. 36 on the bid. 3 level move in our favor when it hits S3 and YDL, now 54.60 on the bid. 3.5 level move in our favor, 11:04 a.m. 61.10 on the bid. Finally, the 4 level move in our favor, 11:38 73.30 on the bid. Okay, now we'll go back to the other main chart. Okay, so as mentioned in the previous video, if you do have an interest in purchasing this indicator, all of our indicators are sold on a one payment for lifetime access basis. And in return for you taking your valuable time to watch this video today, you can send us an email at daytradinggps@gmail.com and request a discount promo code. And in return for you watching this video today, we'll send you a discount promo code for purchasing this indicator, which will give you a substantial discount on the purchase price. You will also get lifetime access. As we mentioned, all of our indicators are currently sold on a one payment for lifetime access basis. What that means is that you make one payment, then you have access for life. That lifetime access also includes any updates to the indicator, as well as any future versions of the SPX Daily Key Levels indicator, which we are coming out with a V3.0 version in the next couple of weeks. We don't have the exact date yet, but it's sometime in the next couple of weeks. However, when that V3.0 version comes out, the price will be going up substantially from what it is now. It will have a lot of new substantial enhanced features from the V2.0 version, and it will be a lot higher priced. However, if you buy lifetime access to the current version, you will not only be able to get it at the much lower price, beginning price, but you'll also be able to apply the promo code you can request from us. And then when the V3.0 version comes out, instead of paying the much higher price like everyone else will be paying, you will get that at no additional charge. And then if we come out with additional future versions sometime down the road, then you will also get those as well at no additional charge. So again, thank you for taking your time for watching this video today. If you like the video, please hit the like button, as it helps us with the YouTube algorithm. If you'd like to be notified when we come out with post new videos on our other indicators, we do have other daily key levels indicators. We have one for stocks and ETFs, one for Forex and crypto, one for the NASDAQ NDX index, and then also one for futures. So if you look on our playlist, you will see that we do have playlists on our YouTube channel for the stocks ETFs daily key levels indicator, as well as the futures indicator, and also the NASDAQ NDX indicator. We will be putting out some videos soon on the Forex crypto indicator. We have not done that yet. All of those indicators are also going to be updated very soon as well with their own newest versions. And when those versions come out, they will be a lot more expensive than what they are currently as well. So if you want to be notified of any new videos that we put out on various trading topics as well as our various indicators, then please subscribe to our YouTube channel as well to be notified when those are posted. Okay, thank you for taking the time for watching this video today, and we wish you prosperity in all your future trading endeavors.